Good morning to all. It's Wednesday, and here's our financials breakdown. Reuters this morning reports that the SEC in October had put off a decision to control the sale of leveraged ETFs and other exchange-traded products. Apparently 20% of ETFs are leveraged or inverse, and some, those that are traded on margin, can be quite problematic. In the US, with millions of Texans still in freeze-down, the dollar overnight added 0.18% after the Empire State Manufacturing Index soared in February to 12.10 from 3.5 the month before. Yields on 3- and 6-month Treasury bills held up nicely, even increasing a tad, while the 10-year soared to a 1.289%, all of them near one-year highs. Consequently, the Russell closed down 0.7% last night, followed by the Nasdaq minus 39. The Dow added 0.2%. My two bits worth on the Nasdaq now that high-tech earnings are nearly done. Well, it's up top. We have a bearish engulf, followed by quite a few hanging men. The RSI seems bearish as well, and down below a pretty resolute MACD crossing below its signal. If we break below the moving average, it could be for a relatively long haul. Later today, we should be getting dollar guidance with mortgage applications at noon, followed by PPIs in retail trade at 1:30 GMT. European indices closed mixed yesterday, the DAX closing 0.32% and the FTSE down 0.11%. The euro is also down 0.25% despite positive economic sentiment markers from both Germany and the EU, both of them up 10 points and more. Q4 GDP for the zone also surprised to the upside with a 5% contraction. The pound bounced off support at 138.64 last night, defining a new one at 38.80 this morning as extremely positive data hit the wires. We're talking consumer inflation up in January a tenth to 0.7 and better than expected PPIs. However, as everyone else, car registration in January plummeted by 32% month on month. On the hourly chart, we can see a clear descending triangle, a bearish RSI, and the volumes speaking volumes. All the US data today will probably deepen the trench. This morning sees the Hang Seng up 1% and Nikkei down 0.6 on apparent profit taking as the yen remains impervious to overnight data from Japan. That's a better than expected trade deficit in January and a 5.2% month-on-month increase in machinery orders. Over the week, we've seen a beautiful cup and handle pattern forming, and based on the RSI, that dip up top could be profit-taking. For now, there's little reason to see that trend reversing. Oil this morning continues slightly up on Texan shutdowns, while expectations are rising for an easing of OPEC Plus output restrictions in April. Gold lost another 0.41% and is now down to $1,791.7 per troy ounce. While Bitcoin overnight breached the 50K mark, but beware if you're using the Bitcoin ticker widget or a Steemit Earn Money clone, both were found to be using Xmote data trackers. Nestle this morning said it was selling its North American water brands for $4.3 billion to concentrate on premium brands such as Perrier, and Adidas said it was probably going to sell its Reebok brand. Reports-wise, AIG yesterday announced a 7-cent loss per share. That's down from last year's $3 gain, while CVS Health revenues grew 4% year-on-year to $69.5 billion. Earnings slipped 44% to $1.30 per share. Later today, we'll be getting quarterly results from Shopify, Rio Tinto, Baidu, and, would you believe they still exist, Jack in the Box. And so, as a belated winter strikes us all, we bid you all adieu until tomorrow.